Hello everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of August the 29th, 2016. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, we can see that the levels that I talked about in last week's Forex Weekly Outlook continues to hold. Now, this is the lower part of the Brexit range. We have the upper part of the Brexit range, which we're now moving back towards in the dollar index at or about the 96.60 level. Now, the critical area that we need to watch right around here is our key VantagePoint 18-day predicted EMA, which is 95.24. We've closed above this level. Now we need to stay above this level so we can retest the upper part of this range. Our neural index, our predicted short, medium, and long-term differences are all moving higher. We've got a crossover in our predicted MACD, albeit below the zero line, and our predicted RSI is at 61.2. Now at 61.2 here, guys, that suggests basically the markets are potentially getting ready to trend. The predicted RSI, of course, being a leading indicator here. Now, it's difficult to say at this time how the equity markets are going to react to this, but in most cases, the equity markets don't really like it when the Fed starts talking about rate hikes. So we've got to be a little bit cautious here on the S&P. We can see right now, again, we've been sitting up at this area just under 2,200 for quite a while now, guys. Probably close to 2 months. So our key VantagePoint level, we've closed below that level at 2173.59, closing the week at 2168. That is potentially a bearish signal for the equity markets for the S&P 500. Now, the S&P 500 is, of course, the strongest of the global equity markets, so that in turn could send a bit of a shockwave into our DAX 30 and even our Nikkei. But the Nikkei, guys, that's the one to watch. If we're trading the yen, we really want to see if the yen can weaken. Now, if the yen weakens, that would basically tell me that the Nikkei 225 is going to move higher. The other indices are likely to follow, but that's left to be seen. We've been tangled up around this Brexit high again for almost 3 months now, 2.5 months, guys, since basically the end of June. So we are not breaking above that level that I've talked about over the last several weeks, which is essentially the 17,000 mark on the Nikkei. So that remains a problem. Now, with our additional intermarkets that we want to be looking at, we want to be looking at oil and gold here, guys. Now, the first one here that comes to mind here that is a problem is, of course, the oil contracts. Now, I've talked about this also in the last couple of months. More importantly, the last couple of weeks, I've suggested that I don't see a lot of upside potential here on oil going into September, October. So we're struggling off of this breakout point from the Brexit. We've moved lower. We can see we've come down. We've come back up and retraced, but now we're moving lower again. So for this coming week, 46.24, the VantagePoint 18-day predicted EMA, we want to hold above that level if oil has any chance of pushing higher. Now, we have closed at 47.64. So that may give oil a bit of life here. We may actually be able to, we might, and I can't stress that word enough, might be able to move higher. But the indicators from VantagePoint are very, very conflicted here. We can see that we're coming off the long-term predicted difference. Right here is moving lower, as is our medium-term and short-term. But our shorter-term indicators are saying that oil probably has a little bit of upside left. But I don't think we're going to clear $51, $52 a barrel anytime soon here. Now, what I've also talked about more recently, just in the last couple of weeks, is how gold is unable to break above this key Brexit high here, which is coming in at about the basically 1360. Our key VantagePoint level now is 1334.80. We can see we've closed at 1321.50, below all three of the VantagePoint critical areas, the 3-day, the 8-day, and the 18-day predicted moving average. Now, we do have some minor support down here. You can see we've essentially been running in a channel here for the last month and a half, almost 2 months, and that comes in at about 1310. Now, if we lose 1310, Gold is going to have a more serious problem here, in my respectful opinion. Likely a more deeper pullback back down towards where it was prior to the Brexit vote, which would put us back down, in my respectful opinion, fair value on gold back down around 1250. I would say that at the current time there's a better than 50% chance that that's where we're going. Looking at the predicted RSI at 36, we have plenty of room to move here, guys, before we move into oversold territory. Our predicted MACD crossing over the trigger, and our predicted short, medium, and long-term differences, our strength indicator, and of course our all-important neural index, all are pointing lower here. So right now it does look like gold is going to struggle next week, but a lot of this has to do with the fact that the Fed is getting hawkish. Now next week is going to be a critical week for the US dollar because we're going to get the non-farm payroll number and the ADP, starting with the ADP report on Wednesday. Now if we get a good payroll number, guys, then that brings the rate hike in September back on the table. That's essentially what everybody's talking about here. If we get a bad labor report on Friday, then essentially the dollar is going to sell off here, guys. Okay, so we are data dependent next week to some degree. But again, even if it's not a great number, my view is the Fed is going to hike in December. So when we get into our main currency pairs here, starting with the Euro US, again, we always look to that critical level of VantagePoint 112.18 here. We can see we've closed at 111.94. That is a very bearish close here. Now, triggered by Yellen, there's no question about that, but our neural index, our long-term predicted difference, our medium-term predicted difference, the medium-term crossing over the long-term predicted difference. Basically, the medium-term is weakening against the longer-term trend. So we can see that put a top right in here, and down Euro US went long before Janet Yellen ever opened her mouth here, guys. Very important to state that the signal was coming from VantagePoint to short this thing long before that actually even happened. So basically Janet Yellen has confirmed that. Our predicted RSI 37.4. Right now it's reasonable to suggest next week we could very well return back to the 109.50 area. But again, we are data dependent. I don't think we're going to see a big sell-off in the euro till at least Wednesday of next week. And again, with gold moving into a very bearish tone here, the euro has a very high correlation to gold. Now, with gold, once again, you know, it's only moved higher because of the fact that the market believes the Fed is not going to hike in September, and maybe the Fed is not going to hike in December either. But again, if we look at gold, I would put the fair value back down around 1250. The fair value on the euro would be back down around 110. So that's going to probably push the euro currency lower, which will in turn cause a rise in the US Swiss franc pair. Now this one's moving along at a pretty good clip here, but again, looking at that Brexit vote, the Brexit high comes in at the 98 level. This is our first obstacle for next week, is to clear that 98 level. Now the key vantage point level 97.07, buying into this area is a very reasonable play up until Wednesday of this coming week, until we see what the first glimpse of that ADP report is going to be, the payroll number, which is the ADP, excuse me. So we're looking to see if we're going to get a good number. If we get a good ADP report, guys, the dollar is going to start moving on Wednesday aggressively, okay? Now, our neural index, our predicted short, medium, and long-term differences, we've got a crossover on our predicted MACD, and 69.3 on our predicted RSI. Plenty of upside yet here, guys. So I don't think, once again, we're going to see it take off until Wednesday, but the uptrend, the current uptrend on US Swiss franc remains firmly in place. Now, as we come into our other major European currency, the British pound US dollar, once again, guys, we have not seen a huge move after we've had this big sell-off to the upside. So we've had a big sell-off on that Brexit, on the fear that the UK is going to leave the European Union. Once again, I think that's a good thing, not a bad thing. So when we see this, we've got a swing low all the way down here into this 132 area, and we are not able to break free and clear. So we've got this little channel between 132 and 135, and it continues to hold. The key vantage point level here, 131.26. closing out at 131.23. So right now, shorts still carry the edge here. When we look at the additional indicators from VantagePoint, we're below the zero line on the predicted MACD. Our predicted RSI could not hold above the 60 level here, guys, so we've lost that upward momentum that was beginning to build prior to Jackson Hole last week, but there has been no follow through. And of course, the British pound has succumbed also to the US dollar strength. Now, this again, as long as we're below this 130, basically this 132, 133 area, then clearly there is a downside bias here. So even after 2.5 months, the British pound has not seen any real recovery other than to get up to 135, where the sellers immediately drove it lower again. So again, we look for next week to hold below 131.26. If we hold below 131.26, we are likely to see a much more aggressive move to the downside into the first part of September. Now, with the dollar yen, we appear to be recovering here. My concern is that we have to have the Nikkei recover. If the Nikkei recovers and starts moving higher, then we have a very good potential long trade. Now, our key vantage point level, 101.21, longs off that to start the week here, I think are reasonable. Let me just correct that here so everybody can see. And again, that 18-day predicted EMA coming in at 101.21. We've closed at 101.78. Everything looks good there. We've got our neural index coming in here for support. Our predicted short, medium, and long-term differences and our strength indicator are telling us we are going higher. Once again here, guys, I want to bring this to everybody's attention here. The medium term crossing over the long-term predicted difference. So buying, I know with my own direct clients, we've been buying down here just under the 99 level. And I think we've got a real shot of getting back up towards the 105, 106 area. But again, we have to have a good payroll number here next week, guys. If we have a bad ADP report on Wednesday, that's what will start to trigger a dollar sell-off, and that would put the dollar yen back down into that 99.50 area. So very data dependent week, but right now the underlying indicators from VantagePoint, the predicted MACD, the predicted RSI are all in agreement that this pair is going higher. Now we'll just clear this off for our next pair so everybody can see. And again, we have to be careful of that ADP report, because the market, it's not about the non-farm payroll number here, guys. It's about, is it good enough that the Fed will hike? That's what it's all about. So when I look at going into our commodity currencies, not a big surprise with gold lower, oil lower, that basically our commodity currencies are all under pressure. US, Canada, Aussie, US, New Zealand, they're all the commodity currencies are struggling here. Now, again, what I've talked about over the last several weeks explicitly is these swing highs and swing lows from that day of that Brexit vote. So the US-Canadian pair, you can see that we've got some new lows here coming in, but every time we get close to the lower part of where the market was prior to the Brexit, we can see that the market is immediately, this pair has recovered each and every time. Now, our vantage point level, our key level, 129.60, we're closing the week out at 130. Very, very bullish in my respectful opinion. But for the USCAD to continue to move higher and follow the primary uptrend, then what we need is oil going lower. We need gold, silver, all moving lower. And right now, it's very unlikely that either gold or silver or oil will recover to any real extent in 2016, particularly if we get 2 rate hikes. Okay, guys, and the demand for oil and the demand for gold is actually very low. So when we look at supply and demand issues, the fundamentals don't really support either longs on very many commodities right now either. So we'll watch this level to begin the week. But again, we've got a crossover in our predicted MACD, our predicted RSI, 59.7. Once again, guys, a great signal here from VantagePoint. The medium term crossing over the long-term predicted difference. I talk about this funny little indicator, proprietary indicator from VantagePoint, and how incredibly effective it can be using basic swing lows. So we have the market has come down here. It's come down, down, down. Then we've got a swing low right here. We can see the medium term predicted difference crossing over. There is no lag in this, guys. Zero lag. Maybe a couple hours. And that's it. And then we've been moving up ever since. Now, that's consistent with, again, that swing low of the Brexit. So for now, everything looks like a green light for the US CAD to continue to move higher. Is the Canadian dollar dependent on that US labor report? Absolutely it is. So if we get a bad number, we could see a reversal, but right now I would suggest that we'll be at 131 rather quickly this week, probably by midday Monday or early Tuesday. Longs clearly carry the edge, not only while above the key vantage point level at 129.60, but also above the Brexit low point, which is 127. 127, guys, this is a critical area down there. We will only see a trend reversal on a break of 127. So keep that in mind, and for now, we buy on dips down to that level. Now, as we look at the Aussie currency, I've also talked about this I've been very, very specific on this for the last 3 weeks, that 76.50 is the line in the sand for me, that if we can't get back up above this Brexit high point here, which comes in about 76.50, then essentially this pair is likely going lower. Now, right now, our key vantage point level is 76. Whoops, let me just clear that up so everybody can see it. Our vantage point or critical level is 76.08, so shorts carry the edge while below that level. We can see 75.58. We've closed well below that level, suggesting there is further downside. So right now, a potential target is probably back in this 74 area, but we want to be very careful around this 73 area. Now, case in point here again, too. Shorting if we look at the indicators from VantagePoint, we connect the dots to the neural index, the long-term predicted difference rate here. Basically, VantagePoint was saying to start shorting this pair about 2 weeks ago. So when we talk about systems that have lags and things like that, there's very little lag in this if we know what we're looking for. So I think for now that there is a clear downside bias with the Aussie. We're also pushing below that all-important 40 level on our predicted RSI, our predicted MACD. Everything here is lining up for a bigger move down. So to start the week, two levels that you want to watch very closely, 76.08 and the Brexit high of 76.50 right here, guys. If we hold below that level, we get a good non-farm payroll. By the end of the week, we potentially could be back down under the 74 level. Now, our final pair here, our New Zealand pair, this one has been a tricky one. I've talked about this one again over the last what seems like several months, which I guess in theory it is. We've got the swing high from the Brexit. We've had 1, 2, 3, 4, 5 attempts to get through this area right there, and we failed. So we held the vantage point, or excuse me, we held the swing low off of the day or the night or the morning of the Brexit vote, and we went back up only to fail again here. Then we've been tangled all up here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 more times along this simple Brexit bar. This is just this bar right here. So I'm watching this bar and I'm looking at the vantage point indicators. So we're on the top of this line again, which comes in about the 73.20 area, and again we're failing, despite the fact the Bank of New Zealand was actually somewhat hawkish on rates this past week, which caused a big spike up to about 73.50. Right now, shorts clearly carry the edge, but we've still got a problem here, guys, that I want to point out to everybody. 72.34, we've closed at 72.29. We are right on that VantagePoint 18-day predicted moving average. Now, even though we're failing up here, we're not failing at the VantagePoint 18-day predicted EMA, and I'm going to point on here just over the last month or so, we have held this area 1, 2, 3, 4, and I'm going to count this one too. We've held it 5 times. So it's not a clear picture. New Zealand is clearly the more bullish of all the commodity currencies, meaning the CAD and the Aussie. So the New Zealand currency, if we start breaking below 72.34 and we stay below that level for a couple of days, then we're likely coming back down to the 70 cent mark. Now, in a rate hike cycle, 70 cents is just the norm for this pair. For the many years that I've been in the markets, I've traded it at the 70-cent mark a lot more than I've traded it at the 80 or 90 mark. Just to clarify, so basically when gold started turning into a downtrend back in 2011, the New Zealand has struggled ever since then. Also, it's had a very difficult time holding on to some of these critical levels. Now, again, when we look at it over the course of the last year on the New Zealand currency, it's had a better year. It has absolutely had a better year in 2016 than it did in 2015. That's for sure. But again, this all still looks corrective in nature here. Only a sustained break of the 74 level, in my respectful opinion, will take the pressure off the downside once and for all. But again, going into that rate cycle of rate hikes in the US and rate cuts in New Zealand, not exactly favoring the New Zealand currency here.